Dan?
I just think you got to focus on this intraday volatility right now. If you're an investor and you're looking for opportunities to kind of figure out where this market bottoms, I think given the uncertainty on policy, like you just mentioned, it really makes it hard. It brings you back to maybe COVID in those early days in March of 2020, or you go back to kind of the summer of 2008, where we really didn't know what the potential outcomes. I think we have that here, except for the fact that you have an administration who could put somewhat of an end to the guessing game, right? And so the S&P right now, after a 7% intraday move, is pricing for the rest of the week about a 6% move in either direction. That seems cheap right now. The MOVE index that tracks the Treasury market is at all time, well, it's 52-week highs, right now. So we're seeing some major dislocations. Crude oil just broke below basically its COVID lows, other than the one that it got all funky, you know what I mean, with the delivery thing or whatever. There's just a lot of things that are acting very
dislocated. I think we should stop and talk about bonds today, because something really funky happened in the bond market, which is, so what's been happening since the tariffs were announced is people bought bonds. They went into safe haven bonds, they bet on recession, and yields went down. Guess what started happening yesterday? The opposite. And it wasn't a relief rally, because today stocks sold off and bond yields did a full round trip from pre-Liberation Day. And now we worry, do we have to worry about foreigners selling our bonds?
Look, it's a great question. And one of the first things I think we should say is that there was, on this topic, is there was a very disappointing 3-year auction. We've got 10s and 30s this week. And I think it's both ignorant and arrogant to assume that there can't be some regime change. You know, people want to sit around and say reserve currency is not in question and that the U.S. is still the place that's going to be the flight to quality. I agree with that. But there's no question that, to me, that if I'm hedging local currency risk, investing in bunds and investing even in BTBs in Italy or in gilts in the UK is probably a lot more attractive. It is more attractive than it's ever been. The GDP differentials have come to a place where actually you could see a GDP surplus, or essentially a spread over what's going on here. You also get to a place where we talk about this all the time, and I know people kind of poo-poo the ratings agencies, but again, I've been investing in emerging markets my whole career. The things that are going on here is the kind of stuff that gets you downgraded. And if you look at the revenue side of the income statement, and based upon dynamics, do we really think tariffs are going to make up for lost revenue that would be coming from tax revenues? And do you really think that this the policy that we're hearing about, whatever you want to call it, is a $740 billion tax? It's a tax, a tariff. You know, you can use that word too, but that ultimately this is a dynamic where it's going to be. This is not a stimulative policy. There's nothing about it that's going on that's going to stimulate growth. So I get back to the bond market, because I do think this is what you had today. You had a dynamic where not only are we 50 basis points wider on the 30 than we were earlier in the week, at a time when you should be seeing a flight to quality here, in a growth scare.
That's my point.
And so I think that's part of what's going on here, and part of the volatility we're all talking about. The dollar just today, just in today's trading session, had 5 intraday moves of plus 50 bips, minus 50 bips, plus 50 bips, minus 50 bips, 5 times for the dollar today alone.
Yeah, but think about what happened today. It's a great example of how they'd just gotten things ass backwards. They were focused on the 10-year yield. Remember, that's the thing that they were worried about, lowering it. And the stock market, they didn't really care. And look at the weakness in the stock market and the strength in yields. And so that's the sort of thing that makes you lose confidence about what they come out and say.